Don't put all your eggs in one basket, and diversification is for idiots. Which one is it? Hi, this is Fabi from The Next Big Rush, where we talk about growing your wealth through smart investing. If that's anything you'd like, hit the subscribe button down below and the little bell right next to it so you don't miss any of my future videos. So I've been sort of struggling with these two concepts lately because I think it's pretty much common sense. We grow up thinking that, hey, we can't really risk everything that we have and we can't really afford to, bet it all and go all in. And I think to some extent that sort of fear of losing money has dominated a lot of the way that we manage our portfolio or mismanage our portfolio. On the other hand, I've been looking a lot at not diversifying completely, not having too many eggs, not too many different eggs in the one basket. And I've been looking at different quotes from different people. I was actually pretty shocked at how many multi-millionaires or multi-billionaires, excuse me, have tried to teach people to move away from the whole diversification myth. So here's some of the quotes that I found, but I want to pose the question to you, and if you could comment down here below, I'm going to tell you in a moment just what I have decided to do regarding diversification for my portfolio. Maybe it's similar to what you do, maybe it's completely different, but let's see what the real masters say about it. So here's a quote by Warren Buffett. He says, "Why diversification is only required when investors do not understand what they are doing." Robert Kiyosaki says, "Many financial advisors recommend that you diversify for your own protection. What they fail to tell you is that it is also for their protection. Since most financial advisors cannot tell you exactly which stock or mutual fund is a great investment, they tell you to buy a bunch of them." Also, Bill Gross. "Do you really like a particular stock? Put 10% or so of your portfolio on it. Make the idea count. Good investment ideas should not be diversified away into meaningless oblivion." Now, Sir John Templeton, and you've probably heard of his story. He basically bought, if I'm not mistaken, everything under $1 in the stock market when it crashed in 29 and then made a gazillion dollars from it. He says the following: "Diversify. In stocks and bonds, as in much else, there is safety in numbers." However, he also comments, "In my 45-year career as an investment counselor, humility did show me the need for worldwide diversification to reduce risk. That career did help me to become more and more humble because statistics showed that when I advised a client to buy one stock to replace another, about 1/3 of the time the client would have done better to ignore my advice. In other endeavors, humility about how little I know has encouraged me to listen more carefully and more wisely." So he kind of says both things. I'm not quite sure at which point of his career Sir John Templeton actually said each of those things. But here's the conclusion that I have come to. If I play in the resource market, it is far too risky for me to go into one company and put all of my money behind it, put my faith behind it, because I have no control over that particular commodity or that particular company, how well or not it is run, how well it is financed, because I'm not a big enough backer to make sure that the company is going to thrive. And so I'm not really comfortable going too heavy on one company. However, what I am very comfortable going almost all in would be a thesis. Now, like I've mentioned before, a thesis would be a theme. For example, if you believe in a certain commodity, or let's say uranium. I really believe in uranium, and so most of my portfolio is based on uranium because I believe that there's a price disconnect. We can't produce forever pounds at a deficit, so eventually the price is going to have to catch up to at least the cost of production, but most likely much higher than that. So that's my thesis. Yours may be the EV revolution, electric vehicles. It might be that you want to buy into lithium and cobalt, etc. So that is your thesis. And so I have come to believe, based on some of these quotes and just based on what I have seen, is that if you have a thesis that is well formed and that you are willing to see through for many years until it actually plays out, it might be better to actually just stick to that thesis. I know, because when I look at my portfolio, I look at the stuff that isn't uranium right now, and I know that I could have made more money by just shifting those stocks into my main thesis. I would not, like I said, pick just one stock and go crazy over it, unless obviously I was like on the board of the company. So I want to know what you think about diversification. Do you think it helps or does it hinder? Has it bettered your portfolio this year or not? Let me know your experience in the comments section. That's the question of the day. That's it for today. Thank you. See you in the next video. Take care.